Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Monday, January 8th, 2024. It's 2:12 p.m. Eastern Time as I'm starting the video, so we've got about 2 hours left in the trading day, a little less, and figured it's a good time to get out an update. I'll keep it relatively short, just update the important stuff right now. The equity markets we're going to start out with here. QQQ, so I fired off a post to you just recently. We're now coming up, I give you, two scenarios, and both kind of go into the same place, just when we'd pull back. Now we're going to hit that alternative scenario. I was even going to put odds. I should have done that. It was like 55-45. It was very close because, remember, I talk about this often when trading an index, in this case QQQ. You want to watch both the ETF and the futures because there are different subsets of traders, and sometimes the ETF traders will step in and sell, which they didn't at 402.80. And sometimes the traders, the NQ traders, will step in and buy or sell at a support or resistance level is what I was trying to say. And so what we've done is we've carried up. Now, remember, all along, this was my preferred target right here, 404. Call it 404. And we're coming up on that now. And again, that's just a minimum. These are all the potential targets. And pretty good odds will carry up through to some of these higher targets, 405.83, 407.50-ish, and 409.40-ish. However, most likely get a reaction. And this is a level that I think the odds are very good for a reaction. Translation, active traders can close a long and or go short. Just shy of 404 is where I'd put it. 390, 399 and change. You can get pretty close if you want, or you can, what I'll do sometimes is there's a case to be long and has been for the last few days. I've been making, and I do think there's a good chance I think we can probably carry higher up to any or all of these targets. And so, if you're not an active trader, what you can do at this point is just raise stops to wherever, depends on your entry price. The way this game, if you call it, works is the wider your stops, the less likely you are to get taken out on the zigs and the zags. In other words, nothing goes straight up, at least not forever. It's been a pretty straight move since this most recent divergent low on Friday. That's a little started to rally off of it. Close. We gapped up today, and we haven't really had a pullback yet. And again, I put good odds that we'll get one here at 404.07, that target there. Remember, on the 60-minute chart, it was 406.32. That's what I gave you on the 60-minute chart. You can see it right there. Let me move that over. Pretty decent resistance. And again, there's still this gap right here. So that's the bottom of the gap, the top of the gap. If they do enter, will fill. But again, we'll probably have a reaction here soon because we're coming up on, like I said, I zoomed down to the 15-minute chart and we're at the next level. But more importantly, what I wanted to go to is NQ right there. This is a level. I've been throwing out the 15-minute charts for active traders recently since starting last week. Gave you when we were here. No, it was right here on Friday. Said a pullback. Objective time for active traders to book profits on longs, go short. And then I put another update. I got that out to you this morning. They were in the comment section on Friday. And then that was right here. We went in. We had a marginal new low, but have exploded off there. But we're right at resistance now. 16,757. Let me look at the 60-minute chart real quick and see if I see anything different there. That's not the one I want. Bear with me. I've got a lot of charts going here. Let me pause the video and find the one I'm looking for. Oh, I see it. It's over here. Yeah, there it is. So remember, this was our short trade. Short there. 51 bounce. First target hit. Second sell signal. T2 hit. This is the reaction. So this is why we're long. We had a bullish falling wedge here on the 60-minute chart. We hit my second target for the short trade. Bounce. And I gave you these targets here. And that's a good resistance level. So I'll say it one more time. I think the odds are pretty high for a tradable pullback. What does that mean? Well, I'll give you targets before. You can look at, I probably should pull this line down. I don't want to mess with the previous targets, but I'm going to show you, or I'll add a line for you real quick. Maximum pullback target, again, would be slightly below that, and it's right about here. Here, let me zoom in and show you what I'm looking at here. So you can see, get a couple reaction highs here, somewhere in there. But although This is impulsive today. We may not go that far. Again, I just use the word maximum. I think that's a maximum pullback target before another thrust higher. When I step down to the 15-minute chart, this is the level I gave you today on the chart I got it to right here. So I think this is a decent pullback target. That'd be a good drop. That should be 1% or better, right? Or close to it. 0.67, be about almost 0.8%. If we hit it. So, I think, again, there it is. Do what you want. I think the odds are good for a tradable pullback. There's a target for you if you want. And then I think we'll probably carry on up higher. But I'm going to show you some other things we need to watch. Okay, this one's a gift that keeps on giving. This was first laid out as a trade idea somewhere back here, end of, in December. Just last night, remember, these are futures. They trade around the clock, just like the stock futures, except they shut down on Friday evening, pick back up on Sunday afternoon or evening. And so last night, T5 was hit, and these were all the targets laid out. The only difference on the original chart, it was the previous, I think the January contracts. These are the Februaries right here. And then we roll these. Remember, the Februaries are going to roll in January. It's like a month. It's kind of quirky with the nat gas futures. But that was a gift right there this morning. Made a point to get that one out to you. And if you bought the pullback to the minor trend line today, you've already made 10% from there. And if you were fortunate enough or around last night to close out at T5, you would have recycled back in and sidestepped that give back. Remember, we had negative divergence there. But nice explosive move off that trend line and a quick, 10% on futures. If you're a futures trader, you take 10% all day long. But it's the nature of this beast. That's natural gas. It's a volatile sucker, but it's been trending. And crude too. Crude's been pulling back. Here, I'll get to that. Crude's just had another pullback too. Looks objective here. So far, we're making a series of lower highs. We need to take out this previous high. Remember, we failed. This one was also long with that natural gas way back here somewhere. We hit my first target right there. T1 hit, T2 hit. Reverse just shy of T3 with that divergent high. But again, we need to go up, and I think we will go up and take that out. I don't have as strong a conviction in crude as natural gas, but I think it's that's the most likely case there. And to strengthen the case for a pull, I just clicked on this chart by mistake, but it brought back up QQQ again. Remember, I look at the 5-minute charts are a good one to get an idea. You can see we're diverging here. You got some divergence on the 5-minute chart of QQQ as well as NQ, the Nasdaq 100 futures. So again, this is probably the catalyst for a pullback. You can see it there on the 5-minute chart. If you want to get real granular, if you're an active trader and you just want to trade a shallow pullback, I would say somewhere there, at least at 401.90-ish level. That's going to give you, it's about a 0.5% pullback. But this is, a little bit deeper target that will align with what I gave you on NQ a minute ago. And maximum, I think, right now is down here. On a related note, Apple, that was thrown out as a long trade idea to you the other day on the 4th, I think, last week. Little divergent low here on the 60-minute chart. And we went long here, and I said we could go down because we had a little more downside before my QQQ second target, which was 1%. That's exactly where that was. So I already went over this. It was your entry price. Hit the second, the bottom of that support zone there. It's been walking its way up, and also this is one, but not the only reason for being long the NQs lately in the Nasdaq 100. That's still the first target. The one I gave you the last week, 187.17 is the actual resistance level. You want to sell a little bit below that. But, if we can get some momentum this week, again, we'll pull back first, I believe. But your other second potential target's that downtrend line right there, and then a final target zone here. I thought I had put in some, there it is, there, T1, T2 zone. But I just wanted to point out that downtrend line is likely to come into play before, if we hit T1, get a reaction. And what I'm looking at here is this big old gap right there. So, traders will probably sell the bottom of the gap. But it depends on what NQ is doing at the time and what Microsoft, Alphabet, Amazon, NVIDIA, Meta, Tesla, the rest of the Mag 7, what they're doing. So very, very near term, I'm looking for a pullback from this very moment because we're at that target on NQ on the 15-minute chart, which again right here, 16,757, and pull back and then get back in, game a little pullback on the short side, get back in long again. What else I want to give you? Oh, so let's look at the other things. The things that drive the stock market. So you have the euro, and this is one reason I expect a pullback as well. E7 are euro futures. Make sure that's up to date. I believe it is. Bullish falling wedge, breakout. Remember, we had positive divergence. This was one of, and a big reason for going, covering shorts recently and going long to game this bounce is that the euro is looking constructive, and there's a direct positive, highly positive correlation with the stock market in this, the euro, and gold and silver as well. So, but right now you can see if you zoom in, get a little nitty gritty today, you can see this pullback here. So I just showed you NQ as I started the video. NQ is at the highs of the day, and so yet, and you get that. I guarantee you, I can't guarantee it, but I'm sure a very, very large percentage of Nasdaq 100 future QQQ traders and NQ, they're not looking at the euro. And they're probably not looking at Treasury bonds, but I am. So this pullback here, they're not seeing it. The market hasn't gotten the memo yet. And so I think that will, especially if this continues, then the Nasdaq will play a game of catch up. So we'll get a correction off these levels we're at right now. You want to look at EUR USD as well. It's going to mirror that, but same thing. So there's a little bit of a pullback yet. QQQ is at session highs, not factoring that in right now at this point. Treasury bonds, let's talk about that. So we had, it's been a short since back here, somewhere here. I suspended the highs right before into the holidays because, well, for the reasons I already stated, both on the market correction and stocks looked imminent. There's a high correlation between bonds and stocks. So the correction in bonds looked imminent and likely high probability. So that's why I suspended the stops. We're still in this one. But the point is, this has been going down, meaning rates have been going up. And, we're not rallying. There's a little bit of a lift in TLT today, the 30-year bond. Again, meaning bonds up, yields down. But the trend has been lower. So I think this... let me just say this. Keep an eye on this, because if this continues and we do happen to make it down to my my first target, the market will start to take note there, because again, that means rising yields. So watch that. Of course, you want to watch the 10-year. 30 years best for trading, but the 10-year really dictates a lot where the market goes. It's what 30-year mortgages are really tracked to more so than the 30-year bond, believe it or not, but that's just how it works. And, again, we broke this minor uptrend line. The major uptrend line off the lows. We're very overbought. Everybody, believe me, I was uber bullish bonds back here when most were uber bearish. But right now, and I just saw a headline today, I didn't read the whole article, about just how bullish the market is right now on bonds. And when you get a one-sided trade, at the very least, you don't want to be chasing the bond trade now. And, if you're contrarian, you want to be short because everyone else is bullish and long. And so kind of where I'm going, guys, is more plays out. We'll see how it evolves. But if we continue to see bonds pull back and correct and go on to hit my targets, that's going to be rising yields. And at some point soon, the market's going to talk about it. They're going to talk about, well, what's going on? The Fed's supposed to cut in March, and the Fed's supposed to do 5 to 6 rate cuts this year. Why are long-term bond rates going up? So I'm not saying we're going to hit those targets. I think so. I'm maintaining them for now. But if it happens, then it's going to put the brakes on the stock market rally. So trying to thread the needle here. I'm still longer-term bearish. Intermediate term bullish, but very, short term, intermediate term bearish. It depends on the time frame you're talking about here. When you say if this is the intermediate term, my weekly charts being the longest term, this is where I think we're going. It's just a matter of trying to thread the needle here and see. So and that's kind of on the daily chart. When we zoom back down to the 15-minute charts, I gave you my thoughts. I think it's probably this. Between now and the close today, we probably will see some profit taking, is my guess. most likely. So far, it's been a trend day. A trend day is when a security or an index opens higher and just continues higher throughout the day. But again, we're coming up on some pretty decent resistance, not super strong, but decent resistance. And I've talked on this many times. If you are not an active trader, if it's not in your wheelhouse, your comfort level, your skill set, stick with this. All along, this was the bounce target on the 60-minute chart here, 406.32. So again, like I said, it's a matter of how are we going to get there? I think we're going to get there this way, and then get up there and then run up there. That was on the 60-minute chart, the 406.32. But I'm kind of really focused on this 15-minute chart right here. And there's the big old gap. So again, maximum target right now, and minimum target's pretty much where we're at. So we'll see. And what could end, this could be the end of the rally, and we could turn down and go on down to my next swing target on the 60-minute chart. Remember, we had T1 hit right here on QQQ. We bounced. This was and still is T2 for that longer term swing trade, but so looking something like that is what I'm thinking. And what's going to cause that right now? Everybody's bullish today, but one day doesn't make a trend. Again, to get that, it will probably be more downside in Treasury bonds, meaning another uptick in yields, and would certainly help to see the euro go down. I don't have a strong read on the euro right now, or a very strong read on Treasuries, but that's that. What else did I want to cover? I already covered Apple for you. Crude, natural gas. Let's just stop it here and keep it short so I can get the video out to you guys, and we'll see where we close today or what happens the rest of the day. This has been Randy Finney with Right Side of the Chart. Have a good one.